of everybody's time.
Right.
So thank everybody for joining us. We're very excited about this month's US ENT Supplier Spotlight. We have our friends from Tulsa, Oklahoma at MEDPLAN Credit. And obviously, when we were looking at which suppliers we could put into US ENT over the last 5 to 10 years, we had a lot of options for patient financing. And there's the big names out there that Bob and Stephanie will talk about momentarily and how they compare and contrast. But we settled on MEDPLAN for a variety of reasons. First and foremost is their commitment to customer service. One of the first things that they'll tell you, and they told me, is how they're obsessed with rapid turnaround for both the patient and for the practice, as far as approval and payment of the practice. Secondly, thinking about the competition, they provide options for all different types, or several different types, maybe not all, Bob, but several different types of credit ratings. And most of the competition really only deals with people with A credit. Thirdly, the financing is cheaper, both for the patient and the practice. And so all in all, MEDPLAN just seemed to be the clear choice to partner within US ENT. And so with that, we've asked them to take the next 10, 12, 15 minutes and just highlight what distinguishes them, what programs they offer. And then we certainly will reserve a few time, a little bit of time at the end for questions. So feel free to put it in the chat window. Feel free to turn your microphone on at that time and your camera and ask questions directly. This is very, very casual. Again, we'll be respectful of everybody's time and try to wrap this up within 30 minutes. So with that, we have Bob Frame, the CEO of MEDPLAN, and Stephanie Oliver, who's the real boss of MEDPLAN, right? So we have both of them joining us for this presentation. So guys, take it away.
Great. Thanks so much, Dr. Matheny. Appreciate the introduction and appreciate everybody's time and allowing us to tell you about MEDPLAN. I want to give you just a real quick background and kind of a history on how we got started and what the impetus was for MEDPLAN Credit. I spent, I don't know, roughly 30 years on the other side of the desk doing what a lot of you do. I was CEO of a big cardiology group, of a big oncology group, was CEO of a physician-owned surgical hospital. So I understand what you guys go through every day and what the perils and pitfalls are. When I was running the hospital, and it was up in Hutchinson, Kansas, we in Hutchinson is sort of a working class town, if you will, and so there were a lot of folks that had insurance and thought they had great insurance until they came in and needed a knee replacement or something like that, and they find out that, oh my gosh, I've got a $5,000, $6,000, $7,000, $8,000 deductible that has to be met before I can get this procedure done, and I've got $500 in the bank. What do I do? And most of these folks didn't qualify for conventional credit from Care Credit or some of the others that focus on the A credits. So we're talking. I'm talking amongst my friends and investors about what can we do about this problem, because it's a real problem and it's only going to get worse. So we developed the MEDPLAN program where we can finance subprime patients as well as the prime patients that Care Credit and others will finance. But the way we do that is to we take a credit application from the patient. We do a soft credit pull. We give a tentative approval based on the credit tier that they fall into based on our underwriting, combined with the credit tier that you as a provider decide to accept. So here's how it works. Patient fills out the application. It comes back that they're not a prime credit. Let's say that they're a B credit, and you as a provider have decided that you want to accept B credit patients. So we charge a 20% deduction on the loan proceeds, and we remit 80% to you within 5 days. And in a few minutes, I'm going to explain why why we came up with that methodology and why we believe that it works and why it's the best method for financing your patients. So the underwriting process is really simple. We spent a lot of time and significant investment in building a digital loan platform that is very scalable, that automates the entire process. So it's built around a decision engine that takes factors from a credit report, from self-reported information, combines that and determines what we call the MEDPLAN credit score. And it's a combination of their FICO score plus some other factors such as employment history and a debt to income ratio and several other factors. The MEDPLAN score is scaled along the same scale as the FICO score, up to 850. From that score, then they're placed into a credit tier. The credit tier determines what the reimbursement percentage is to providers. Now, we certainly understand that some providers don't want to take a bigger discount than say a 20%, because we'll go to a C tier, and I'll show you here in a minute on a slide, but we have a C tier that is a 35% discount, and we have a D tier that is a 50% discount. And I know a lot of times when I'm talking to providers, a lot of times I get sort of a shocked look when we say that we charge 35% or 50%. But this is based on real data. We've been doing this now for over 3 years. We have a pretty large data set. We are pretty good at identifying from a given set of credit criteria what the likelihood of a default is on a given account. So, for example, we know that on our B tier accounts that we will have between a 5 and a 15% default rate. Our data shows that. And so by charging a 20% discount, we have covered our defaults, and then we built in our cost of funds along with that. So that's the whole methodology behind our credit tiering. Now, how does this whole system work? Well, it starts off with a provider agreement that specifies which credit tiers you elect to participate in. If you elect to accept all 4 credit tiers, A, B, C, D, then any application that fits any of those criteria will be approved. The patient will sign their loan paperwork, the loan is done, and you will receive your funds within 5 days. So the patient fills out I'm sorry, let me back up. We complete the provider agreement, we get that signed, we do our customer training for your staff so that you know how to use the program, so that you can instruct your patients on where to go to complete the application. Once that's done and you start referring patients to MEDPLAN, they go online to your provider-specific loan application page, which is co-branded with your logo and MEDPLAN logo. They complete the application, it goes into our system, and within nanoseconds, they'll be returned a decision on either a tentative approval or a denial. Once we have a tentative approval, they can elect to go forward with completing the loan application, or not the application, but continue going forward with completing the loan. And once the loan is complete, then it will go into the queue for payment to the provider within 5 days. We have a provider portal where you can see what the status is of any of your patients that have applied for a loan, what the gross loan amount is, what the net amount is that will be paid to you, and the overall status of that loan. It's really it's a simple process. It's quick, it's efficient, and you know, as Dr. Matheny was talking about, we take a lot of pride in our customer service department, and you know, I think in this day and age, a lot of times you go to find customer service for virtually any product, and you have to hunt through a web page to maybe find a phone number or maybe to find a contact form. But we are happy to publish our customer service number and encourage people to call our customer service people that can help, whether it's completing an application, whether it's a provider that has a question about one of their patients filling out an application, if it's a question about the funds and when they're going to be sent and a calculation, whatever it is. our customer service is there, and when we staff our customer service from 7 a.m. to 6 p.m. Central Time, Monday through Friday. And again, we're always there to help. And so I guess one thing I want to talk about briefly is and I'll call it the case for accepting lower tier credit applications. You know, Care Credit and others like that, they approve about 30% of the applications that come in, which is great. And Care Credit's a good company. I'm not here to bash Care Credit. I think they do a fine job. What MEDPLAN does, though, is we can do everything that Care Credit does at a little bit lesser cost, but then we can also provide the financing for these subprime patients. And so why would you want to take a subprime patient? Well, there's really three questions that I ask when I start talking to providers. The first one is, do you know what your overall patient pay collection rate is? And like I said, I did this for 30 years, so I have a pretty good idea what it is in most practices. And you know, I know that there are anomalies out there, but if our patient pay collection rate was above 50%, we thought we were doing a pretty good job. So keep that in mind as you're thinking about these provider discounts. The second thing is what are you going to do? What is your policy when you have a patient that cannot pay their patient responsibility? And if your practice is one that says, well, we're not going to see them, we're going to refer them to another provider, that's fine. I'm not going to judge anybody. But if you're like most providers that say, well, we're going to figure out a way to see this patient, how do you do that? Do you do it with an in-house payment plan? Well, if you do, I would like to present data that shows that your upfront non-recourse payment from MEDPLAN will be more than you would collect from a patient on an in-house payment plan. Combine that with the fact that we're all having trouble finding employees right now with all this labor shortage. So if you have to allocate resources to somebody that's going to be spending part-time collecting in-house payment plans, well, I think there's probably a better use for that labor. And then the final point I would like to make is that if you have a situation where you are already covering all of your fixed costs in the day with your current patient mix, or if you're a surgery center, you've got enough cases to where you've covered your fixed costs. If you take additional revenue, even if it's discounted revenue, that revenue's fallen to the bottom line because you've got all your fixed costs covered. So those are my cases for why you would consider accepting a discounted amount for seeing your patients. Plus the fact that, you know, your doctors want to see these patients and they want to see them get treated and get well. And so with that, before I want to show you a couple of slides that kind of reinforce what I've just talked about, but are there any questions before I move on? If not, I will share the screen. And I'm going to, can you see the PowerPoint?
Not yet.
Okay. Oh, here we go. Now can you?
Yes.
Okay, good. Technology, it's great. So this just sort of reiterates what I was talking about in terms of how the tiering works. And so 95, 80, 65, and 50 for the patients that their underwriting falls into these tiers. And then the next slide is a comparison that we put together to kind of highlight the advantages for using the MEDPLAN model. And you know, we say that for the traditional in-house financing model, you're not charging any interest, but you're accepting all the risk and liability while you still have your own cost of capital within your entity. You know, no vetting of the patient credit or ability to pay. You have to have staff to handle those in-house payment plans, and you've got costs that you're probably not focused on, such as there's cost of office space and personnel and all these other things that you have to incur to collect that money. And then the provider the practice is accepting all the financial liability. The competitor model, a lot of times they'll charge a non-promotional interest rate, 6 months, 12 months, 0 interest if you make all the minimum payments and you get it all paid off within the promotional period. If you miss any of the payments or don't get it paid off in full in the promotional period, it's 27% interest back to day one. We think that's predatory and we do not support that in our transparent model. And again, they only approve about 30% of the applications. They don't have a good customer service department, just a general corporate helpline. And we, like I've already mentioned, we charge fair interest rates. We approve more patients because of our credit tiering system. We've got dedicated customer service, provide detailed itemized statements. And you as the provider can choose what credit threshold that you want to accept. So I think that I've covered everything that I would like to cover, and again, would love to have any questions if there are any.
So Bob, the great presentation. Thank you so much. Very informative, and I think it's evident why we love having you as partners. The first question that our practices ask us, and I probably asked you, is do you send patients to collection agencies, or do you have a collection agency in-house? We as providers, we as practices and physicians really fear that process, because a patient is not paying, everything may or may not have gone well clinically, but as soon as you send them to a collections agency, all of a sudden every medical decision, every communication from a medical assistant, every email that was ever sent now gets scrutinized to see if there's any recourse from the patient side, whether it's to the state board and state authorities, or even sometimes, God forbid, malpractice.
Right.
And so we always, while many of us do use collection agencies, we're hesitant to, because in this regard, from our perspective, the patient kind of has all the power. If everything didn't go absolutely perfectly, they can really make our life miserable. And so a lot of times we'll let a few $100s go here and there. So what is MedPlan's policy on collections?
Great question. Thank you for asking that, because we, having come from the provider side, certainly understand everything that you just said, and the angst that we've all had in terms of what are they going to post on the internet? What are they going to, even though it's hard for us to fathom that this person does not value our service enough to want to pay for it, but that's a whole different point, right? Our corporate philosophy, and we have a weekly meeting with our staff. Every Monday morning when we have our meeting, it's emphasized that our company was built based on a mission, and our mission is to help patients. We're not we do not want to be the bully. We do not want to be a collection agency. We're not a collection agency. We provide loans for people so that they can get their procedures. That being said, we also can't stay in business unless we collect our money. So our philosophy that we preach every week is this: we will work with anyone who communicates with us and expresses an interest in working with us. When they don't communicate with us, and this is after a period of at least 12 emails and phone calls, if we have no response from them and no willingness to work, then we will begin collection action. But it's done in the name of MedPlan Credit. It has no reference back to the provider. And we make a really strong point of making sure that everyone understands that this is an agreement with MedPlan Credit. Just like you have an agreement with MasterCard or Visa, it's an agreement with MedPlan, and any kind of collection action is done in the name of MedPlan. So we take as soft of an approach as we possibly can, but if people refuse to work with us, then we don't have any choice but to do some kind of a collection action. Okay.
Thank you for that. That was very clear. We had another question come in through the chat. So, again, it's a good thing. It's a good thing that you offer options for subprime patients. From the clinician's perspective, this person makes the point that those are patients that probably would not have that treatment or service because of financial reasons at all. So the practice is looking at getting zero for selling hearing aids, high deductible office balloon sinuplasty, what have you. So can you, though, describe again, I mean, you went through it, but it seems like pretty steep discounts to most of us for these subprime patients. And so I guess what are the numbers? Is it still worth it for the practice in the context of either losing the case entirely or having to administrate an in-house plan?
Well, again, I will tell you, and I would make a guarantee that we will pay you more in a upfront payment than you'll collect in-house. It's just, yeah, there are probably some practices that maybe can prove me wrong on individual cases, but overall, our data doesn't lie. And again, I've been doing this long enough that I know, and I'm willing to put my money where my mouth is. We would guarantee that our collections would be better than your in-house payment plan. So that's that point. The first question, though, about, how do you determine, that's an individual practice decision in terms of, what your margins are, what your overhead costs are. Does it make sense for you to take a 20% or a 35% discount and still be able to make a margin? And if you can't, then it probably doesn't make sense. But there are a lot of situations where there either is margin to do that, or the doctor knows that they're going to treat this patient anyway, so it's better to have less of a loss than a complete loss. So
yeah, that makes good sense.
The third thing I would say is that we are totally transparent. I'm happy to share my data in terms of what our default rates are for any given tier to anybody. We'll show that globally. Of course, we can't provide specific individual loan details, but I can show you globally what our default rates are by tier and how much we've written off in each of our tiers, and it matches the numbers that I described earlier.
Okay, so in summary, the practice is faced with really getting nothing or getting something, and it's a local decision on what that margin is, where its worth is, right? Okay, that makes good sense. Team, any other questions? Jeff, thanks for hopping on. Don, thanks for hopping on. Anything, Michelle, before we let these folks go?
Can I ask a silly question? Is MEDPLAN like Care Credit kind of an insurance or a financing option for patients?
Yes.
Okay.
We are, and we do everything that Care Credit does, but we also offer financing options for providers who want to finance their subprime patients, and that's something that Care Credit does not do.
I'm sorry I'm late to this. I would like to get more information on this. We've had bad luck with Care Credit, and the Allegro leasing program is really awkward for an audiologist to go through. I don't know if anybody else has done that, but so we're looking for some sort of a smooth, easy to implement, easy to operate system.
Yeah, Jeff, we'll be happy to provide the full recording for this, probably 10 or 15 minutes, so it's a quick watch. But full of all that information. And that's what's great about MEDPLAN is they do everything that Care Credit does, but for a little bit less expense. And they open it up to B, C, and D credit if you and the practice choose to take those patients. And we in my practice, we take B's and C's because we figure it's better to get something than nothing. We can, as a physician, still treat those patients. And we don't have to administrate the in-house payment plan. So that makes sense for us. But yeah, Bob expounded upon that much better than I did.
And Jeff, we're happy to follow up, individually with you as well. I can have Stephanie reach out, and if you'd like to have set up a call, we can certainly do that.
Right, because we were looking at this for some facial plastic stuff as well. So
great.
Perfect. Anything else, team?
No, sounds good.
Well, thank you so much, Bob and Stephanie, for your time. And thanks everyone for joining us. If you're watching it live or you're watching it later, we appreciate each and every one of you, and let us know at any time if there's anything we can do. Have a great afternoon. Take care.
Thank you.
Thank
Bye-bye.
you.
Thank you.
I know.
Bye-bye.